Why 95% of traders fail and how you can win. The Architect's Framework to Stop Gambling. Have you ever found yourself in a truly strange position, a place of deep frustration? You've read the essential books, maybe dozens of them. You've sat through hours of online courses and seminars, you've memorized the classic chart patterns, and you understand technical analysis on a level that should, by all accounts, make you successful. Your screens are covered in indicators, enough data to launch a mission to Mars. In theory, you possess all the knowledge you could ever need to navigate the markets. And yet, when the moment of truth arrives, when the market is live and the pressure builds, something inside just breaks. That calm, rational analyst you spent years building vanishes in an instant. Someone else takes over the controls. Someone who makes impulsive entries, who rationalizes holding a losing trade, who chases a skyrocketing price out of a primal fear of missing out. You've hit a psychological wall, and the gap between what you intellectually know you should do and what you actually do in the heat of the moment has become a vast, unbridgeable canyon. This is the great and painful paradox of modern trading. We've discovered that the enemy isn't a lack of information, because we are drowning in it. The true enemy is the flaw in our own execution. For far too long, we have been trained to be analysts, but we end up acting like gamblers in a casino, making bets based on adrenaline, hope, and fear. This video is about finally ending that cycle. It's about how to stop gambling and start building. We are going to lay out the blueprint for how you can become the architect of your trading career, constructing your success with discipline, process, and intention. The great deception of the financial markets, the one that keeps millions of intelligent people trapped in a cycle of boom and bust, is the idea that success comes from better predictions. It's the belief that if you could just find the right indicator, the perfect signal, or the one guru who has it all figured out, you would finally become profitable. This quest for clairvoyance, for a crystal ball, is the root of so much anxiety and frustration. It sends us chasing complex strategies, buying expensive software, and constantly changing our approach, always hoping the next thing will be the one that can finally tell us the future with certainty. But here is the fundamental truth, the one that can actually set you free. Sustainable profitability does not come from prediction, because no one can consistently predict the future. It comes from having a superior process. Success in this field is almost entirely a game of psychology and rigorous risk management, not a game of fortune-telling. Therefore, the real opportunity being presented to you today isn't some new trick to beat the market. The opportunity is a profound paradigm shift in your own personal performance. It is the chance to conquer your own internal chaos, to stop being a victim of the market's whims, and to finally achieve the kind of professional discipline that builds lasting success regardless of what the market does next. So how do we make this critical shift from being a reactive gambler to a proactive architect? We do it by committing to a system, a robust, personal constitution for your trading that I call the Architect's Framework. This isn't a get-rich-quick scheme or a secret indicator. Think of it as a comprehensive blueprint for constructing your entire trading business brick by disciplined brick, designed not just to perform in calm markets, but to withstand any storm the market throws at you. The framework is built on three foundational pillars. The first and most important is the mental ledger. This is the bedrock of everything. Before you even look at a chart, you must look at yourself. This pillar is about a radical commitment to psychological self-awareness. It means identifying, in writing, your specific emotional triggers, your cognitive biases like confirmation bias or fear of missing out, and your true tolerance for risk, not what you wish it was. It's like an accountant's ledger for your mind, allowing you to audit your mental state before you ever risk a single dollar of your capital. Once that foundation is solid, we build the structure with the second pillar, the risk blueprint. This is your unchangeable architectural plan. It is a set of hard, non-negotiable rules that govern every single action you take in the market. It defines your precise position sizing, your exact criteria for placing a stop loss, and your absolute maximum loss for a day or a week, after which you must walk away, no exceptions. This is where emotion is systematically engineered out of the decision-making process. The blueprint doesn't care about your feelings or your hunches. It only cares about mathematical discipline and the long-term preservation of your capital. Only when the foundation and structure are in place do we bring in the advanced tools. This is the third pillar, the logic engine. This is where we intelligently leverage technology, including artificial intelligence. But let's be very clear, the AI is not a crystal ball. It is not here to predict the future. Think of it as your own personal quantitative consultant. Its job is to serve your blueprint, not to create it. You use this logic engine to validate your trade ideas against historical data, to identify statistical probabilities, and to tirelessly scan the markets for opportunities that perfectly match the strict criteria you've already defined in your risk blueprint. Psychology first, risk second. The tools come last, always in service of the system. With the framework built on the pillars of mind, risk, and logic, you might wonder what the actual skill is that binds them all together. It's likely not what you expect. The most critical competency isn't advanced chart reading. It's not a deep understanding of macroeconomics, and it's not about learning to write complex code for an artificial intelligence. The single most crucial competency for you to develop is the discipline of systematic thinking. This is the ability to not just create a personal constitution for your trading, but to live by it day in and day out. It is the practice of being the chief scientist of your own performance, where every action is a test of a hypothesis, and every result, whether it's a win or a loss, is simply data to be collected and analyzed dispassionately. It's about having the conviction to build a machine, and then possessing the discipline to let that machine run as designed. To pull this out of the realm of abstract theory and put a powerful tool directly into your hands, we need to translate this philosophy into a concrete process. This tool is called the pre-trade interrogation checklist. It is simple, profound, and should be non-negotiable in your routine. Before you ever think about clicking the buy or sell button, you must pull out this list and answer a series of hard questions, preferably in writing. You must ask yourself, what is the objective, observable evidence for this trade based purely on my predefined strategy? What is my predefined exit point if this trade goes against me? And is that stop loss in a logical place based on market structure, not on hope? What is my target for profit? And is the potential reward at least several times larger than my potential risk? Am I entering this trade out of pure logic and alignment with my plan, or am I feeling any emotional drivers like boredom, greed, or the fear of missing out? And finally, how does the size of this position fit within my overall risk blueprint for the day and for the week? The power of this checklist is that it forces a mandatory moment of pause. It injects a dose of pure logic into what is often a highly emotional moment, creating a crucial circuit breaker between impulse and action. But a system is only as good as the thinker who wields it, which brings us to a crucial warning. Systematic thinking has two great failure modes. The first is analysis paralysis, where you become so obsessed with designing the perfect, flawless system that you never actually execute a trade. You become the architect who designs magnificent blueprints but never actually breaks ground. The second danger is blind obedience. This is the trader who follows the blueprint so rigidly that they fail to recognize when the entire market environment has fundamentally changed. They're the architect who follows the original plan even after an earthquake has completely altered the terrain. Your goal is not to become a mindless robot. Your goal is to become a thoughtful, adaptive, systematic thinker who builds a robust plan and then executes it with unshakable discipline. Now we move from the blueprint to the construction site. This is where the abstract theory becomes concrete, daily practice. We are going to walk through a series of 8 specific protocols that bring the architect's framework to life. These are not suggestions. They are the core disciplines of your new profession. The first and most critical is the protocol of executional proof. For your first 20 trades using this new framework, your goal is not to make money. In fact, your profitability is completely irrelevant. Your only mission is to achieve 100% adherence to your process. On every single trade, you will use the pre-trade interrogation checklist. You will respect your predefined risk from your risk blueprint, and you will execute without hesitation. A trade that follows the rules perfectly and loses you money is a resounding success. A trade that breaks the rules and gets lucky is an absolute failure. This protocol is designed to do one thing: to build a foundation of undeniable proof that you can trust yourself to follow your own plan, which is the rarest skill in this entire industry. This mindset of focusing on execution leads directly to the next discipline, the protocol of probabilistic vision. The amateur asks, "Will this trade work?" The professional architect asks, "If I take this exact setup 100 times, what is the statistical likelihood of a positive outcome?" This protocol is about fundamentally shifting your perspective from seeking certainty to managing probabilities. You will use your logic engine, your AI tools, not to ask for a prediction, but to ask for historical data. For a setup that looks like this, what has been the performance over the last 500 occurrences? You begin to think like a casino owner. The casino has no idea if you'll win the next hand of blackjack, and it doesn't care. It only cares about the small statistical edge that it knows will play out over thousands of hands. This protocol ingrains that same professional mindset into your DNA, liberating you from the stress of needing any single trade to work out. Once you see the market in probabilities, the next step is to rig those probabilities in your favor. This is the protocol of asymmetric risk. The rule is simple. You are forbidden from entering a trade unless the potential reward is a significant multiple of your potential risk. For most professional traders, this is a minimum of 3 to 1. This means for every $1 you are willing to lose if you are wrong, you must have a logical reason to expect to make at least $3 if you are right. This principle is the mathematical engine of long-term profitability. It allows you to be wrong a majority of the time and still build your account. Imagine a system where you lose 60% of your trades, but your winners are 3 times larger than your losers. You would be incredibly profitable. This protocol removes the immense psychological pressure of needing to be right all the time. Your job is not to be right, it's to be profitable. This focus on the math brings us to a crucial psychological discipline, the protocol of process over payout. At the end of each trading day, you will not judge yourself based on your profit or loss. You will judge yourself on a simple, binary question. Did I follow my process perfectly today? A day where you follow every single rule in your blueprint and end up with a small loss is a successful day. You have strengthened your discipline and reinforced good habits. A day where you break your rules, take an impulsive trade, and get lucky with a big win is a catastrophic failure. Why? Because it reinforces the very behavior that leads to ruin. It teaches your brain that gambling works. This protocol forces you to focus on the one thing you can actually control, which is your own behavior, not the unpredictable outcome of the market. Long-term success is simply the byproduct of a flawlessly executed process. To ensure you begin each day with the right mindset, you will implement the pre-market prime protocol. This is a mandatory 20-minute routine that you perform before the market opens, and it strictly forbids looking at live moving charts. Instead, you will spend 5 minutes reviewing your mental ledger, reminding yourself of your emotional triggers and psychological goals. You will then spend 10 minutes rereading your risk blueprint, embedding your non-negotiable rules deep into your mind for the day. Finally, you will spend 5 minutes setting your single intention for the session, which is never a monetary goal. Your intention is to execute your plan with discipline and professionalism. This ritual primes your mind for calm, logical decision-making before the noise and emotional chaos of the live market has a chance to hijack your brain. It is your mental armor for the battle ahead. But even with armor, unexpected attacks can happen. That is why you need the emotional circuit breaker protocol. These are hard and fast, predefined rules designed to protect you from yourself in moments of high stress. You must write these down and place them where you can always see them. If I experience 2 consecutive losses that hit my full stop loss, I will shut down all platforms and walk away from my desk for a minimum of 1 hour. I will never, under any circumstances, add to a losing position. I am forbidden from widening my stop loss once a trade is active. These are like the circuit breakers in your house. They are designed to automatically shut down the system when it's overloaded, preventing a small problem from burning down your entire account. They are not guidelines, they are unbreakable laws. After the market closes, your work continues with the protocol of identity reinforcement. This practice involves a form of journaling where you specifically focus on what you did right according to your process. You will open your trade log, and for every trade, you will write 1 sentence confirming that you followed your plan. For example, I waited for the exact entry signal as per my blueprint. Or, the trade went against me and I took my predefined loss without hesitation. This may seem simple, but the psychological impact is profound. You are actively collecting evidence and providing your brain with positive reinforcement for disciplined behavior. This conscious effort systematically rewires your self-image, helping you to internalize the new identity of being a systematic professional trader. You become what you repeatedly do and acknowledge. Finally, once these protocols are second nature, you can appreciate the protocol of universal application. This is the understanding that the architect's framework is not tied to any single market, asset, or time frame. It is a universal system for managing risk and psychology in any speculative environment. The principles of identifying your emotional triggers, defining your risk before you act, and demanding an asymmetric reward for that risk are timeless constants. Whether you are trading stocks, cryptocurrencies, forex, or commodities, the operating system remains the same. This frees you from being a one-trick pony, forever tied to the fate of a single market. It transforms you into a professional risk manager who has a core competency that can be deployed wherever you can identify a statistical edge, making you truly adaptable. A blueprint is worthless without a construction schedule. So let's lay out a clear, tangible roadmap for your transformation from a market gambler to a market architect. The journey to mastery is a continuous one, and once you solidify these foundations, you can move on to advanced architectural concepts like quantitative journaling to find your statistical edge, or even building automated scanners that tirelessly search the market for setups that match your exact blueprint. But before you can run, you must learn to walk. This is not a vague, undefined goal. It is a 90-day transformation timeline broken down into 3 distinct and achievable phases. Phase 1, the first 30 days, is about laying the foundation. During this month, your primary focus is internal. You will dedicate your time to building your mental ledger and meticulously crafting your risk blueprint. This phase involves deep self-reflection, rule setting, and system design. Any live market activity should be done on a simulator or with the smallest possible stakes. Your goal is not to make money. Your goal is to finalize the architectural plans with absolute clarity before a single real brick is laid. Phase 2, from day 31 to day 60, is focused on building the scaffolding. Here, you begin to execute your plan with small, real capital. The mission during this phase is singular: 100% process adherence. Profitability is a secondary byproduct. This is where you stress test both your blueprint and your own discipline in a live environment. You are building the real-world habits of execution, proving to yourself that you can operate under pressure while respecting the plan. Finally, Phase 3, from day 61 to 90, is about mastering the blueprint. Once your execution has become consistent and second nature, you can begin to slowly and methodically scale up your position size in line with your risk parameters. This is also the phase where you use the data from your case study archive to make intelligent refinements to your system. This final phase is about the transition from conscious, deliberate effort to unconscious, disciplined competence. It is where the architect's vision truly becomes a tangible reality. We have reached the end of the blueprint, and now you stand at a crossroads. It is a moment of decision. You can close this video and continue down the familiar path of the gambler, forever hoping for a lucky hand, forever at the mercy of the market's emotional tides and your own impulses. Or you can make the choice right now to begin the real work, the work of an architect, the work of building something with intention, with discipline, and with a foundation so strong it can last an entire career. Your new path as an architect doesn't start with a trade. It doesn't start with an analysis or a chart. It starts with a single, powerful act of self-awareness. So this is your first task, your first assignment. I want you to grab a notebook, a piece of paper, or open a blank document on your computer. And you are to write down the honest answer to one question. What is my single biggest emotional weakness in the market? Is it fear? Is it greed? Is it the need to always be right? Be brutally honest with yourself. That one sentence, that moment of unflinching self-assessment, is the first brick in the foundation of your new career. Lay it now. Once you have done it, come back here to the comments and simply write "brick laid." By making that public declaration, you are making a commitment to yourself and joining thousands of others who are starting this exact same journey.